Hey guys, it's Nick. After today's drop in the stock market, the S&P is officially in a bear market, which means 20% or more down from the last high. Let's look at what's going on in the market to get a better idea if we are close to a bottom or if it looks like the market has a lot more room to fall. Most bear markets do not have a quick V-shaped recovery unless, of course, you have a whole bunch of Fed intervention like we did in 2020 during the pandemic-driven market drop. Now we are in the opposite position. The market is dropping while the Fed is in the process of raising rates and selling off all the bonds they bought in the last 2 years. A bear market usually ends when your friends and coworkers no longer talk about stocks or crypto that they bought every time you see them. So far, we're not even close to that. So let's take a look at what's going on now. So the market opened with a huge selling wave, which brought the tick down minus 2,000. And the tick is the New York Stock Exchange uptick minus downtick, meaning stocks that trade higher than the last trade versus stocks that trade lower than the last trade. And that was the 5th largest sell program in history. And Bloomberg says sell programs of this size are typically not single events. They tend to happen in clusters, and that probably means that stocks might be in store for bigger losses. And this is the S&P futures on May 22nd. It was saved from falling into a bear market down here and rallied from there, but this time there was no saving it. So it blew right past his bear market line, and so we are officially in a bear market on the S&P 500. And so the high-flying FANG stocks have now lost $2 trillion from their high, from $5 trillion to $3 trillion, and they're right back to the pre-pandemic levels now. And speaking of losing $2 trillion, cryptocurrency market cap of all cryptocurrencies was almost $2 trillion at its peak around November 2021. And now they also have lost $2 trillion from their market cap and are now below $1 trillion. So a trillion here, a trillion there, and pretty soon you're talking about big money. They are possibly going to raise interest rates even higher than a half a point that they were planning to on Wednesday. There is a supposed Fed leaker, which basically just gets info from the Fed that they want to put out there into the market, saying that the odds are rising of a 3/4 point rate hike on Wednesday. So this is what the market is expecting because of the last inflation report, the high CPI. They're expecting year-end rate hike expectations all the way up to 3.68%. But that goes up to 2023. And then after that, they're expecting that those rate hikes are going to slow the economy or push us into such a recession that right after that, they're going to have to do rate cuts. And this is the odds of a rate cut going from 0 down to minus 0.8%. Here is the top stocks bought by Fidelity customers, retail customers, and their buy and sell ratio. And you see Tesla, 70% buyers, 30% sellers. Apple, similar. The triple QQQ ETF, people are still buying that. 66% versus 33% selling. Amazon, 73%. And the short QQQ, more people are selling it than buying it. And SPY, the S&P 500 ETF, they're still buying that 70% versus 27% selling. The day when I see a really big down day and all of these green and red bars are reversed, that would probably be the day that I think we're close to a capitulation bottom. And when you have a big capitulation bottom, the VIX, the volatility index or the fear index, usually jumps really high. In 2020, it went to 85. In 2009, it went about to 90. Right now, we're sitting at 34, which is up today, but I don't think we'll see a decent bottom until the VIX spikes above 40, maybe even 45 or 50 or so. So there's a lot of bad news out there, but here is some kind of positive news. This chart from JP Morgan Asset Management shows the S&P intra-year declines versus the calendar year returns, meaning These red numbers is how much the S&P fell during the year, but the black numbers is actually where they ended up at the end of the year. So going all the way back to 1980, you see there's only 1, 2, 3, 4, 5, 6, 7, 8, 9 times when the S&P actually ended negative for the year, even though they had drops as high as 19%, 34%, 18% now. So you see in 2008, it was down 49%, but ended up being down only 38%. Here it was 34%, ended up being down 23%. So that's a pretty big jump from the lows. And the average intra-year drops were actually 14%. So the S&P dropped as much as 14% or more, and yet still ended up positive in a lot of or most of the years. So how much further can the S&P and the NASDAQ drop? Let's take a look at a historical chart. This is SPY, the S&P 500 ETF, and this is where we are now. This is the 50-month exponential moving average, and you see that it has only dropped below that during the pandemic, during the 2009 financial crisis, and during the internet bubble back here, and briefly around 2011 or so. And during those big crashes, internet bubble and financial crisis, the moving average convergence divergence has only gone below zero twice, once here and once here. Right now, we are way up here, and this hasn't even crossed through the EMA line. So on the one hand, it has already dropped a good amount, and it possibly could bounce when it hits this. On the other hand, it could still drop back down to pre-pandemic levels somewhere around here. And the same goes for the QQQ, the NASDAQ 100 ETF, and it is a little bit lower, and it's already hitting the 50-period EMA on the monthly chart. And it is farther along to bottoming out here. So, although many people are feeling the pain of lower stock prices and higher costs for food, fuel, and housing, it doesn't seem like people have capitulated yet. We could definitely bounce from here for a while, but I don't think the worst is over yet. Remember, this is not advice, it's just me thinking out loud, but when I start buying some things, they will be either very large, profitable companies or just the SPY ETF or a dividend ETF like VIG or VYM. And if you're thinking about buying something or loading up the truck right now, do yourself a favor and wait till at least after the Fed meeting to see what happens. Hope you liked this video, and I'll see you in the next one. Thanks for watching, guys.